Okay, Monday, 31st of July, 2023. And the summer of the Bulls continues here as we see equities pushing up, NASDAQ up to 0.26, SPOOs up 0.24, Dow up 0.18. Not big numbers there on equities. Oil up just shy of 1% here. And so let's have a quick look at some bigger topics here. What's coming on the week ahead? Well, today, you saw some European data come out, CPI's coming out a little bit hotter than was expected, 5.5 on the core. I've expected of 5.4 coming in line with the prior five. The headline 5.3 coming in line below prior as well, which is quite important. And then the GDP, well, really the year on year coming in there as a nice little beat, 0.6 on 0.5. Prior was 1.1. As we stretch further into the week here, you'll really see French manufacturing, German manufacturing tomorrow, but more importantly, UK manufacturing PMIs tomorrow. Nothing we're going to be trading there, but then come into the US session, ISM manufacturing, employment PMIs, prices, JOLTS, big one there, 3 o'clock tomorrow. Again, Wednesday, then ADP. So yeah, this is all what you get on an NFP week. So ADP, non-farm employment. We saw some pretty interesting numbers out of ADP over the last couple of weeks here, or last couple of months. And then crude oil. I think we're going to get a massive draw on crude oil this week, just simply because stocks are low. I'm seeing a degradation of production activity in the US with rig numbers down. That's oil and gas rigs down. Then we go into Thursday, and you got the S&P Eurozone composite PMIs, the services PMIs. But as we come into that mid-morning session, you got the Bank of England rate decision here. We're not going to be trading that one. Well, I'm not going to be live for that one. The guys in the room will probably be trading that one. Governor Bailey. But then going to initial jobless claims there, 1:30 on Thursday, non-farm productivity, unit labor costs, and then ISM manufacturing. So busy on Thursday afternoon. And then all into Friday for the highly anticipated NFP at the 1:30 market there. What are we looking for? Non-farm payrolls looking for 200,000 here. I think the bank's estimates were at 191,000. So no big deal there in the difference so far. So I'm sure they've lifted up their guidance since last week. So a busy week ahead today. Not the busiest of those days of this week, and so really just jumping over to have a couple of stories really. Hopes running high for the Chinese stocks as Beijing targets consumption. So interesting story here, really. If we let this video roll a little bit here, it kind of sums it up. China is kind of focusing now outwardly, focusing into its kind of smaller districts to essentially put some stimulus out there and re-spark manufacturing. You're seeing that they're looking to boost some of these home goods sectors. So that is going to have a knock-on effect into a couple of places. So you're seeing a tick up 2.5% there on global shipping rates over the last month of July. All right, which is really good for companies like Zim. Lewis, I'm looking at you there. We've ridden through the lows, man. I think the lows on shipping rates are priced in. I think it's only going to go back up, and certainly looking, down the futures the futures expectations of shipping rates. I actually don't have the chart available here, but take my word for it that the shipping rates, when you look at the rates set for December and going into June of next year, they're only going up. All right, you're looking at about $1,600 moving to $1,900 in December, then moving to $2,000 into the middle of next year. So shipping will bounce back. I think it's a really interesting sector. But just here looking at the Chinese stocks, trading quite low at the moment, and China coming out of that lockdown very recently. Wonder if we have any decent charts. So I'll post a link to this article. Feel free to have a read. But I think this is going to be a tailwind for US equities and indeed global equities as China is coming back with demand on oil, demand on imports, and indeed demand or rising supply on the manufacturing side. So matched with all this big talk about there being a US recession, we're not seeing that in the data. GDP rising off of lows in Europe, but holding quite well in the US. So no recession around here right now. And but there's always going to be a bear around the next corner. So just keep that in mind. Um, then looking, I thought this was quite interesting. The worrying rally, the Americas edition here for Bloomberg, really just looking at the huge demand for calls. And from our conversations, if you're following Jason Shapiro on YouTube or any of the conversations I have with him, he's kind of like talking about essentially what we talked about for the last year and a bit, is that the market, once we get to sort of like terminal interest rate for the Fed, is in where they want to potentially stop, which is at like 5.5%, 5 to 5.75, and we're there now. Versus where they want inflation to be at, which is 2%. Well, we're almost there now too. So the concept from Jason was that essentially once we get to there, the markets will rally all the way into that. And then when we get to there and the Fed kind of quit hiking, that's when the markets will really sell off. And so, I think this article kind of potentially feeds into that narrative. You're seeing, and this is certainly feeding into exactly what Jason said would happen, is that people are going to start buying big, double fisted into these highs, and you're seeing the calls there reaching 2-year highs essentially at about, what was it, 8 mil on this gauge here. So that is essentially people getting spec long via call options in the market, right? And so we are blisteringly high, relatively speaking, in equities. Can we take a pullback? We could always take a pullback. Absolutely. Absolutely. Does that mean we're not going to breach the all-time highs this year? No, I think we will potentially get new all-time highs. NASDAQ, I think 100% on DAX, probably on SPOOs. I'd say probably on Dow before the year is over. I don't know. Don't hold me to it, but I think that's what we're looking at here. So I'll share this interesting article, just to really punch a bit of confidence out of the bulls. But you wouldn't catch me buying calls up here, man. I mean, this is crazy town. I mean, I think it's look, it's too expensive for me to go buying calls. I think I'd be really, hoping to just offload that to the next guy for a couple of cents more expensive, wanted to get out of there. So look, that's the market. I'm looking at a couple of news stories. NFP to come is going to be the much more interesting story this week. And so if we go over and look at these charts, look at start with the NASDAQ going left to right here. We've been looking at potential problems for this market to come in here. Actually, around what's today is going to be the 15,923s. Fantastic supports we saw here last week come in right where I said we get it. 15,542s long, and we are up here, up. What are we off of there? We're up about 2.4%. Okay, let's not go crazy here. But I think the big hurdle for this market, 15,925s. Now with China coming back in terms of stimulus, in terms of demand cycle, in terms of manufacturing potentially coming back, it's going to be very hard to see this NASDAQ get contained here at the 925s. Just keep an eye on it though, because should we attempt to bid over here and then fail, and then I'd rather than shorting off of that 925s, I'd actually probably if I miss that, I think I'd be looking for a short on the 875s, 15,875s after a failure up here and a failure to hold the PVAH today, and down she goes. See that 1805, or sorry, the 15,805s, lovely support this morning, confluent with the P-val condition or RPB long condition shift, up we go. So I think we're just going to keep going up on equities. Maybe we'll get an imbalance pullback to buy on this after or through the open. Let's see. SPOOs. You can't stop the rock. It's going up here. Yeah, I mean, look, we were looking at resistance 46.12s on Friday. Didn't quite get there. Got into that March 2022 high though, 46.31s. And this chart, really need to update the data on this chart. I'm getting some lag issues on my daily bars. But nonetheless, we got into that level up here last Thursday. And then, as you can see there, lovely short up, bang, there she goes to pick up those bars at 45.54s. Just a bit of a 1-2 there. I mean, if you go back and, well, for the guys in Discord, these are not me doing this after the fact. These are levels that we had at the time. 45.54 is long. See that? 46.31 short. You see that? Easy peasy, Japanesey. All right. So where are we going? I think a revisit to 46.31s, potentially a pullback imbalance to VWAP to buy, get on that trend. You know, and I'd be taking half of that off of 46.31s. And on the Dow, we go over here to the Dow, and Ian, we'll be doing this in detail after I finish this session on recording here. But yeah, I think we can go higher. I think we can go much higher. I think 35.769s is definitely the next ground for this. You see the buying coming in there last week. I mean, again, you know, I've had this on my charts for a number of days now, right? And if you go back and look at last week's look ahead, 35.398 long, bang, we're not wrong. Okay, so 35.769s, really big area now for the Dow to test into, and that's the high. If you pull back to, we'll remember the 13th of December 2022. Why, I don't know, but certainly a big push to the upside and then fails down. I suspect that might have been a CPI print. I'm not sure. But either which way, we haven't tested that since, well, apart from last Friday, we didn't test that since, the 13th of December 2022. So I think, look, up, and we go. 36.069s should be a target up here on the week. And, well, 958s, 35.958s first. All right. And then oil, to my darling oil. We're going to cover nat gas
Effective
here
Fed funds
first.
rate price about 3% for July 20.
Going to cover nat gas here as well, guys. That's oil, so a very complex picture here on oil. Yeah, 81.69s. Call your mom. Tell her we're hitting it. 82.68 above there as well. So I mean, there's just no stopping this. All we can hope for here is an inbound pullback to 80 spot 80s. Yeah, 80s. Long, bit of volume stacked up there as well on the bid right now. So we get a pull back to there, then bang up to 81.69s, and we're just opening on oil as I'm talking here. Here comes the pullback. Watch out now. Here comes the pullback. I'm not going to be waiting for that to hit while I'm recording this. And nat gas. Look, we got a phenomenal opportunity on nat gas there on Friday. Here it is. Here. The shorts on the 2 spot 762s. Bang, what, down we go there. Waiting for it on Friday, and we're off to the races. So where are we going to? Well, I think on this one we should be looking at the 581s, and then I think this has the potential. I actually want to be long nat gas. And I think the best place for that to happen is going to be down around here. It's 2 spot 381s, 2 spot 4s. So there's a lot of potential for us to swing this trade down now to that area, and that's going to be about 7,300 per single contract. What is the R on that? That's about, it's 12 to 1. 12 to 1. All right, so you heard it here first. Again, call your mom, tell her nat gas, mom, buy the dip. And there is going to be a dip here. All right, so listen, that's it for me for another week, for another pre-US look ahead, or a weekly look ahead now. Please do get in touch, tim@duggancapital.com. Check out the website, duggancapital.com. Please do click to like and subscribe. It would really help us out here on the channel. And listen, stay lucky. Have a great week. Bye-bye.